Good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so let's just catch up where we're at with last week's action. So the markets ended up going down. As I stated at the beginning of the week, the markets will go down, apart from on Wednesday when they shot up significantly after the Fed came out with a 0.50, 50 basis points rise in interest rates. They liked that on Wednesday because the forecast that Jerome Powell gave going forward was that they're not aggressively going to increase interest rates by 75 basis points in June, which was the big concern regarding financial markets. What they were concerned about is that a 75 basis points increase would lead to more 75 basis point increases, and therefore would indicate that the Fed doesn't really know what it's doing. Inflation is out of control. So I just want to talk about that specifically for a minute or two. The Fed is out of control. It's not in control. The Fed is out of control. The Fed is so far, the Fed being the central bank in the States, is so far behind the curve is that it doesn't know what it's doing, and a 50 basis point increase is simply not good enough to combat inflation. So therefore, when they say that there's not going to be a 75 basis point increase in June, it's a big mistake. Okay, the markets understood on Wednesday that was good news, but by the next day, on Thursday, the market sold off all of the gain from Wednesday evening and more. Furthermore, went into a further loss on Thursday evening and Friday. When they woke up and smelt the coffee and they realized that inflation is out of control and the Fed is too far behind the curve, you've got a war that's raging in Ukraine and likely to spread to Moldova and Belarus, or if you want to be more positive, could spread to Belarus, could spread to Moldova, and Putin is not going to withdraw and leave Ukraine without having a victory, because he will lose reputation. Now that's causing a big strain on the supply side of the grains, the soft grains, the oils, the energies, the metals, the lithium, palladium, nickel, silver, all those type of things that are coming out, and obviously the soft energy, the other commodities that are coming out of Russia and Ukraine, is having an impact on the prices in the West. However, if you were to take that out of the equation, you've still got a supply-driven inflation from China. China has a zero tolerance policy when it comes to COVID. And when it comes to COVID, they have a lockdown. So Shanghai was in lockdown, and the provinces around Shanghai were also in lockdown due to a spike in COVID. Now this is exasperating and frustrating the supply line as far as goods leaving China, and therefore manufacturers and wholesalers and retailers and consumers are not getting their hands on those goods, and therefore the price of those goods is rising due to high demand and no supply. When you've got those two factors of no supply or limited supply, and you've got an economic or geographical political war going on, then you've got a double front inflation which is going to spike significantly into double figures. And the Fed and the UK and the EU, they're just ECB, they're just not recognizing this double spiked inflation. And when you talk about double figured inflation, double digit inflation, that is only what they report on the basis of what? On the basis of a narrow basket of goods. However, all the other goods that are around everyday person's life are not considered as part of that inflation number, and that's where it's all wrong. Where's it wrong? The cost of living has gone up significantly, and yet the central banks are only relating to the actual CPI, the consumer price index, the actual price of goods. They measure it according to a basket of goods. However, that's not the real inflation. Real inflation, the cost of living, is around about 20, maybe 30% by now, as you can see in the stores, whether it's in the UK in Tesco's or Sainsbury's or Waitrose, or whether it's in the US in Walmart or Walgreens, or whether it's in Europe, or wherever it is, you'll see the cost of living is just out of control. So the consumer is feeling the pinch in their pocket. In fact, last week, the UK, Andrew Bailey, I've got no respect for whatsoever. He was a failure at the FCA and a failure at the Bank of England, and he can sue me if he wants for these comments. But as far as I'm concerned, they are not understanding the present situation. They've said, oh, the UK is tough now. Wait for 6 months when it's going to be much tougher. And he said, the consumer's going to suffer. It's going to be tight regarding the consumer, the money coming into the household, and therefore they don't want to raise interest rates. And the pound was hammered. Until they grab hold of this inflation animal, then the consumer is going to be affected to such a degree that there will be an increase in debt and an increase in poverty over the next year, 2 years. And they need to be aware of that, but no one is listening to them. Let's go on to the high-tech sector. The high-tech sector has pulled in huge amounts, billions of tens of billions in the last 5 to 10 years. One of the ways they've done that is through a SPAC. A SPAC is a special purpose acquisition company set up to float on the NASDAQ, but doesn't qualify for full flotation. They only qualify for part, and therefore what they do is they offer their shares to the public, and the public invests in those SPACs, hoping that they're going to get a good return on the money. Well, 81% of SPACs are losing money. In fact, sorry, it's even worse than that. It's actually 100% of SPACs in 2021 are in negative territory, and from 2020, 2019, 81% are in negative territory. So the investor has just lost a ton of money through a SPAC. Now, those high-tech companies that believe and feel that there's a queue of people lining outside to invest in them, those investors are drying up, because as rates rise, those investors will be going elsewhere for more secure investment, to invest in bonds or invest in bank accounts or shares that are paying dividends. Are you aware that 50% of the NASDAQ don't even pay a dividend? And out of the other 50%, 2 of those companies make up 25%, which is Apple and Microsoft, which I've stated over and over again. So we're going to go for rough times. The central banks are at fault here. They're not doing enough to control inflation, and the consumer is going to be hit hard. Now, they need to do something to get this under control. Otherwise, there's going to be blood on the streets, metaphorically speaking. Okay? You can contact me on LinkedIn, on WhatsApp, on YouTube. You can subscribe, Instagram. This is Mayor Volensky with Driving Markets. At the moment, inflation is only going one direction, and that is up.